What up? It's your boy Mike from Blockchain Sensei. We're here for a very special episode. We've got a special guest with us, goes by the name of Debs from Stock Pickers Academy. Ninja's got a few things to say.
Yeah, first of all, shout out to JB from V1 Music for providing this space at the Cube. And over to our guest.
Yeah, how you doing, people? My name is Debodun Osekita, man like Debs, Debodun. I run Stock Pickers Academy. It's basically an investing community where we talk about everything. We lead with long-term investing in the stock market, but then it's impossible to have so many people in that group. There's about 6,000 in that group, and all we talk about is long-term stocks investing. You've got day traders in there, you've got property people in there, you've got crypto people in there, and it's basically a community of, I'd say 20% are experts, so people who know what they're talking about. People I've worked with, people in the city that I've just put in there, people who are currently still working in the city, and my next door neighbor, people I play football with, people I go partying with,
Everyone.
basically everyone else and their friends. I think it's very important. Community is very important to invest in because while some people call it community, I call it network. And you can't really invest properly without a network. I obviously have a network. I've got 12 years experience working at different investment banks like Goldman Sachs, Barclays, a hedge fund, Jewish family office.
Jeez.
So I basically learned 4 different ways of trading, investing, and I've cherry picked the best bits and put them all together in a strategy and then simplified it. So someone who's just a postman or someone far away from the investing or finance world should be able to understand the system and use the system without it taking up too much of their time, and also for it to be relatable and easy to understand and easy to follow. Warren Buffett has a quote that says, the person who makes the most money is not always the person with the highest IQ, right? And I believe in that. We're in a world now where there's social media, there's technology, there's Telegram groups, there's WhatsApp group. This wasn't there 12 years ago. So it's very important that people leverage this and leverage the fact that we can have communities on Telegram, on WhatsApp, and we can have financial influencers, shout out Blockchain Sensei. And yeah, follow everyone you see giving content, because you're going to learn different things from different people. And from my side, it's very important that I collaborate and I have conversations with other people who are in this space, because you're always a student and there's always something you don't know, and there's so much to learn, there's so much to do, and I'm not going to sit down here learning how to breed horses in the metaverse. I don't have the time, right? How to raise chickens, there's just way too much important information, right? So what do? I hit up groups like Blockchain Sensei, I hit up the crypto people within my group, and I say, is this true? How do I do it? How do we get involved? Can you pattern a quick how to do this? So anyone who's interested in that can follow it. I might not personally go and do it myself, but I know that by giving other people a platform and a voice, people who are interested in that can be drawn to it. Right?
Simplify complexity.
This is it. Simplify complexity.
The way we relate to that in the immediate present right now is that we've recently done our second ever real estate related webinar.
Okay.
And I'm 100% for the record at present not interested in anything to do with bricks and Airbnb. But some people are. So it's good to provide 100%. Them that content.
This is it. Ultimately, you want the average Joe or Jane, don't discriminate, right, to have as much information on the different ways in which they can allocate their funds. It's then up to you whether you want to do stocks, crypto, forex, metaverse stuff. Metaverse stuff. No one was talking about NFTs or the metaverse 18 months ago. Nobody.
So true.
Nobody.
So true.
Right?
So true.
And now the speed at which new ways to make money come out
Crazy.
is like that.
Every day.
And you don't really have that chance. If you miss it, you have to do the long term thing. But some of these have really good money making opportunities that if you're in early, you can make an absolute killing. If you're in late, you'd make a healthy return. And if you're in really, really late, you still make more money than leaving it in the bank.
Yeah. But that's yo,
right?
I just gotta say, massive shouts to Debs because he's so humble for the things that you've achieved and the things that you do, and like I've never like I think there's this kind of idea that people think people in your position or from your background in the finance world are quite braggadocious and don't want to share information with people.
They're right.
But they are right.
They're right.
Oh,
do you know what? Yeah.
Okay,
finance people are boring.
Okay, Fez.
Right? Finance people do not like to share information. Traders do not like to share their systems. Right?
Are you talking about institutional?
Both.
Finance.
Wow.
Even normal traders who've never worked in a bank,
right?
They don't like to. They have this concept that if it's like sharing your business idea and someone copies it and then now you're out of business. You've got a system that makes money. Technically, look, from an AI perspective, if everyone is using the same signal or the same, eventually over time that signal gets weaker. But none of us is big enough for you. Just the same way your phone upgrades, your system will always need to upgrade. So finance people, traders, day traders, they don't like to share their secrets. What they do is they package it, they sell it, but you will never know how it works. You just give a robot or something, or install a robot, and that's it. You don't know what it's doing, you don't know how it's thinking. I mean, some of this stuff you won't ever understand fully, but I'd like to put my money in a place where at least I know roughly how it's thinking about stuff, how it manages risk. So even my system is intellectual property, right? It is intellectual property, but I'm a disruptor. I've actually said, you know what? Who cares about intellectual property? Let me help the people make money, right? I'm not interested in, closing the shop. And then just giving you that little bit that keeps you coming back.
I hear that.
I'm saying, look, there's my system. I'm going to actually show you the bits of my system that I think you can understand. So when you're using the system, it makes sense to you, right? I put all the simple concepts together in a process. And so people say, a lot of this stuff is on YouTube and there's a lot of free information out there. I'd say 5% of successful investors, right, are able to self-learn their way. And those that do have a lot of stories.
This brings me up to a perfect question.
They fail their way to success. I have failed my way to where I'm at now. And if you want to be a self-learner, make sure your pocket is big. Because when I was failing my way to success, my pockets weren't big, right? But be efficient. If someone has done it, someone has been there, someone has taken those L's and said, look, this is what works from all my 12 years, right? I've simplified it for you. I've given you your blotters. I've given you a watch list that you can access. And I've explained to you how I think, package it into a course. It's a no-brainer to... How much does it cost to learn to drive?
About all in like 500 quid probably?
500 quid to £1,000, right? By the time you do lessons, and in our community, we see that as a necessity, right? People turn 17, proffesional, and we
it's urgent.
No one ever thinks, this is expensive, or this is cheap.
Right.
We're just eager to learn to drive, right? Because you're not going to buy a car and go and drive from London to Manchester without doing lessons, because you yourself, right? A couple people that would do it, but they're really brave and high risk. Likewise, when you're putting money into the markets, whether it's crypto, stocks, or whatever, a lot of us, especially men, we just want to quickly make the buck. We hear something's popping.
Don't want to get the outplates.
But if you really deep it, you're investing in your learning, whether it's doing your course, my course, whatever, you're taking the shortcut, but in the right way. And I spent a lot of time with a lot of wealthy people, right? And the same way learning to drive is second nature to us. Them learning to invest, paying for mentors, paying for mentoring on property, on stocks, 10K a year, 5K. It's second nature.
Mm-hmm.
Because look at it this way, inflation.
Cultural thing,
This is
innit?
it. Class thing.
Yeah,
Right?
yeah.
If you are a billionaire, right? A millionaire, right? Because I guess there are more millionaires. People know more millionaires. Cool. Let me make it.
Millionaires in the world. So.
Yeah. If you're a millionaire, right? Inflation is what? 7%. Let's call it. Right.
Probably, yeah.
That's a lot.
Yeah,
That's 70. That's 70k.
Gone.
Right.
Mm-hmm.
If you do not make a return on that 1 million in a year, that million is worth less.
Mm-hmm.
It's 930,000.
Mm-hmm.
But you'll still see $1 million in the account. But because everything outside is getting more expensive at a faster and faster rate, the worth of that 1 million is less.
Mm-hmm.
Right? So when you start looking at billions,
liability to not have
1
education.
billion's 1,000 mil.
and then you start calculating how much a billionaire is losing every day if they're unable to make a return.
70 mil.
Okay, now you understand why wealthy people are willing to invest a lot of money to learn how to invest.
Facts. Yo, that's a chop right
Don't
there.
wait until you get
Edit
rich.
that right there.
Don't wait until you get rich.
Invest
And then you
in
realize, and then you start, when all along you could have been building, whether you're an entrepreneur, you got a business, a lot of people pour all the money back into their business.
Yeah.
But then when you analyze a company, Coca-Cola, Apple, you analyze their financials, the balance sheet, right? There's always a line that says investments. These companies are investing their money into index funds, ETFs, and the stock markets.
People don't realize.
People don't know. People don't realize. So if you're a startup, if you're a business you're starting to generate revenue, 10% should be going into investing, regardless of performance. And if your performance is actually down on the year, right, in a non-tax haven, or what do they call this thing? Non-tax protected type of investment, you can actually use that to offset your taxes.
Sick.
Right? So that's why it works. And if it's up, great. Your business made money this year. So it's a no-brainer. But a lot of people don't know this. There's a lot of influencers and a lot of business people sitting on hundreds of K in their bank. And the only thing they do know is property. They start buying property. Nothing wrong with that. What you know, but you want that person to be in a position where they know stocks, no property, no crypto. And then they're saying, oh, do you know what? I've got 5 properties now. I've got 3 properties. The next chunk of cash, let's start building a stocks portfolio, or let's start building a crypto portfolio, or let's buy some NFTs, or this is the mindset you need to have. Otherwise, you get lost.
Yo, what's good, guys? It's Keish, technical director and DeFi educator. Good.
Ninja back again. Again, shout out to JB V1 Music for the studio. Back again with Debs.
Debs, founder Stock Pickers Academy.
Boom. And I'm in the background. I'm on cam. It's man like Mike. So we were just talking about one of my favorite subjects, which is taking an L, because in this game, like, you've got to just become comfortable with L's. And my favorite saying is 2 L's make a W.
TLs.
There you go. You do there we go. That's it.
L, flip it around.
Bam.
Yeah.
And you just got to collect these L's. And trust me, this game will make you collect L's. So it's just about, we were just having an open conversation about that. So Ninja, you might as well pick up from where you was about, like, using a diary and whatnot.
Oh, for sure. Just to add to that, slightly off topic, but have you guys ever consciously seen the word believe and then how it has lie in believe?
Yeah,
I have now.
Stuff like that.
Right? That's what I showed Mr. Harding today.
I was like, what?
Believe has lie in it, and his whole life has changed. This man's 32. I'm 26, but I've known this since I was like 10. Because I remember when I was like 10, 11, my teacher told me that's how you spell believe.
But realize.
Yeah, I love that one.
I don't know that one.
You
But
don't
anyway.
know?
So, just for the record, at present filming time, 24th of April 2022, Blockchain Sensei has 5 decision makers, right? So it's myself, Michael, Mr. Harding, Keish, Lucas, aka Mr. Spectacular, and Storm. So we are the 5 current decision makers in Blockchain Sensei. All our 5 lives are synced together on Google Calendar. So I literally know when Mr. Harding's on date night, or Keisha's with his girlfriend, or I'm doing whatever in my personal life. And I was showing Debs, and he was nodding his head, and I was waiting for him to agree that's what we do. And then the answer was...
No, I'm on vibes, man. I am on vibes.
Yeah.
I looked at that calendar and I started getting trauma.
It's kind of coordinated, though.
Sachs.
It's kind of coordinated.
Yeah.
And then we were saying, like, what's your strategy? And what did you say your strategy is?
Do you know what, yeah? I kind of pick and choose when I'm organised. I believe that everyone should be themselves, right? And I'm a disorganised person. But I'm far more organised than 5 years ago, 10 years ago. So I work on it, but I accept that, listen, this thing ain't ever going to be 100.
Yeah, for me, the calendar was like the devil until them men were just like, you have to do this. I was like, you know what? I'm so busy and there's so much things I can't just remember it. Now I need to actually get it documented and written down. But the calendar's helped so much, like so much.
I would say, on top of that, right? We never ask within us 5 when we're free. If opportunities come where I need some of my team, I book it and then tell them it's happening.
Okay.
Because if it's not there in the diary, I'm just gonna assume they're free, and it's worked.
No, that works. I see how that has to be the case, especially once you have a team.
Yeah. I never ask these guys. These guys don't ask me when I'm free.
Yeah, my strategy used to just be remembering my head. I didn't used to write anything down.
Exactly. Yeah.
And I have a very, very good memory
with dates as well. Yeah.
There comes a time, and I think my eureka moment where I was like, you need to start writing stuff down. And this was the first time I actually remember after this moment, actually using a calendar app on my phone and writing things down whenever I had it. Like today, I wrote it down like it was there.
Wait, do you mean wrote or like synced on your phone?
Yeah, just put it into the calendar app.
Okay.
So it will remind me.
I just wanted to ask because some people actually use a physical calendar, but
no.
I'll use
it.
No, my girl's like that.
One thing I'm proud of, I've documented most of my life on Google Calendar since 2016. So I know what I've done in the past 6 years.
Yeah. Not only do you know, but they know.
I mean, they know. So there is that.
So it was when I missed a wedding. And usually on a Saturday, I'm not free.
Were you the best man there?
No. No, you would have had like, if you're on the bridal train, there would have been conversation.
Oh, okay.
Yeah, I think it was one of those ones when they plan it advanced, like 1 year ago. You put it in, you do the paperless post, whatever is there.
Yeah.
And I was sitting at home. I didn't have a football match that day. Didn't have it.
Nothing.
And it's probably because I cleared that date.
Yeah, for it. Yeah.
So I was sitting at home watching Soccer Saturday.
Yeah.
Like, it was a boring Saturday.
Yeah.
And
the stock market's closed.
I think at like 6 p.m. I just went on IG, just looking at stories. I'm like, what's going on here? You got loads of mutual friends.
Yeah.
And then the penny started to drop, and then I saw the
flyer.
The picture of the couple.
Oh no!
Listen, I went into my drawer and I pulled out and I checked the date.
Yeah.
And I was like, whoa.
Yeah.
But it was impossible for me to even make the. I was fuming. I was like, my Saturday was even dead anyway.
Yeah.
Good.
That probably ruined it even more.
I had to have a conversation as well, the couple.
You were just saying about TradingView.
Yeah, so do I look at markets on the weekend? I'd look at I use the IG app.
Yeah.
Because I think
I have IG, still use it.
Yeah, I just look at it's not because it's superior.
Right.
It's just because what I need is there. I just want to know what the Bitcoin price is.
Yeah.
And then knowing the Bitcoin price for me is my barometer for the crypto market.
Okay.
Right? Maybe there's a better one.
Yeah.
But yeah, TradingView's there. And I know a lot of people use it. The same way I know a lot of people use technical analysis.
Yeah.
But believe it or not, I look at numbers.
Yeah.
We mean numbers on the balance sheet.
No, numbers on like, I'll look at the Bitcoin price and
Right.
I'll look at it again 5 hours later, and without looking at technical analysis, without looking at resistance, because I know Bitcoin's high is 60K, and I've been following this for a while, so I've got my own technical analysis, which is my reference point. So
Yeah.
now sometimes I will look at technical analysis just to see like long-term trends and stuff,
Yeah.
but it's very rare.
You're so familiar with it.
Because I look at the numbers.
Yeah.
Okay.
You have a log.
Remember, technical analysis is almost like there to stop you or to make up for the fact that you're not looking at all the markets all at once,
Yeah.
right? But there's some markets that I look at every day, because obviously I day trade the DAX and I day trade Dow Jones. That's my bread and butter,
Is
right?
it?
Scalping, in
Okay.
out. Exchange then pays me a rebate at the end of each month for volume.
So you're a day scalp
I'm a day,
trader.
but I don't teach that.
Okay.
Yeah, I was gonna say.
Yeah,
That's
It's
wild.
a bit tech to be teaching.
No, I don't teach
I
it
don't know how
because
to do that.
the reason I don't teach day trading, right, is because I think learning day trading properly, you need to be ready to quit your job. It's a career. Like, you have to respect the thing.
Yeah,
right?
we don't day trade. We all of us long trade. Like
Yeah.
I'm mainly a swing trader.
Yeah,
So
probably
it's like-
a week to a couple of months to trade. That's
It's
what
like
I'm doing.
you wouldn't go on Holby City. You might have watched Casualty in Holby City for years and years and years. You're not going to go and become a brain surgeon off that, right? Day trading properly is like being a brain surgeon.
Yeah.
You have to
100%.
respect that. You have to respect that
We respect
skill
it.
set,
We
right?
respect it.
As a community, you got to respect that. This thing is not just a goal on your screen.
Yeah.
No.
You might make money
That's a
once,
shout
but
out to
to be
Maestro for killing it day trading as well.
Yeah, go.
to be consistent,
Yeah.
right? For a year, 2 years, 3 years,
Every day. Yeah.
Like you need to look at the screens, you need to look at the numbers, you need to look at a lot of things, you need to understand commercial awareness, like,
Oh, of course.
and then you need experience under your belt.
Yeah.
Experience
100.
of big losses, experience of how to come back from big losses.
losses, yeah.
These things make the whole package.
Yeah.
Can I chuck one in there as well? An experience of knowing when to walk away.
Yeah.
That's what I would say. We're
A
talking about else.
trader will know that sometimes
Just
My
gotta go.
day is done.
Yeah.
Simple. Yeah.
that's it. A proper trader
Yeah.
will know that sometimes you walk away from markets for a month.
Yeah.
Mm-hmm.
Even if you're in profit,
Mm-hmm.
you could have a profitable January to June, and you say, "Do you know what? Let me take a month away. I'm not going to look at no prices."
Mm.
You come back, and you'll notice the market's a bit different. You feel the market. It's a bit like
Yeah.
waking up. It's a bit like falling asleep in spring and waking up in winter.
Oh,
You know that it's not a
something
one.
else.
PG,
No, but
PG.
It's like
Can I,
you just feel. It's not just a Monday thing. You feel,
Yeah.
whoa, the past week has been cold.
I just want to go back to what you said. What were those two things you said were your babies? The Dow Jones and the
DAX,
That's
and
the German stock index.
okay, I'm not familiar with that one myself. The Dow Jones and the DAX. So you only trade those two assets.
I can
you master it.
look.
I
I
think that's-
trade
yeah.
anything that moves. I'll buy and sell that plant if I felt if I felt that I could make money. Right? So
would
there's
you
a
call yourself
reason
like a
why.
price action trader.
There's a reason. Yeah. There's a reason why I picked those two.
Just to
Right?
be familiar with your
Because
pairs.
because when I'm looking at the morning session, right, you need a European index. US markets are not even open. By the time US markets open, you don't really want to be trading. Bear in mind, European markets close at 4:30, right? US markets open at like 2:30, right? So that session to 9:30, it doesn't make sense to then do the DAX, even though sometimes I might still do that. It doesn't make sense to do the DAX there because markets are closed, even though futures are still open. So it's more a case of I want to trade indices.
Right.
And it's like, okay, what's the best index to trade in the morning? What's the best index to trade in the afternoon? Right? And the more volatile the index, the better it is for me. I must start. DAX tends to be far more volatile than the FTSE 100. The more volatile an index is, the more, if you're having a down day, you're going to get more opportunities to work your way back. But also margin. How much margin? Let's say like the minimum one contract, the minimum price movement, how much money can you make on that minimum price movement, right? It needs to work.
Yeah.
You might understand the market perfectly, like in Forex world, you might understand the Aussie, Kiwi, right? Pair. But if you look at that pair, even though you might read it well, it won't give you that many signals. And it just means maybe every signal you put a big chunk on and do something and you trade maybe 4 or 5, 3-4 times a day or 5 times a week or something like that. But then for me, now you're relying on having bigger size.
Lots, yeah.
Whereas with these indices, I can have smaller sizes and just be and use that small amount of money to work the market through the whole day. So my choice is not really because I like Germany. Or I like the stocks on the Dow Jones. It's actually because it's like the admin behind it, like the way it moves, the frequency of the movement, the efficiency of being able to get multiple signals, the efficiency of if you're good, how easy is it to make money? Right? If you're a good scalper, I think it's easier to make money on the DAX than it is on the FTSE. Right? Because the FTSE won't move that much, and even if you did trade it, you need more in your account per price movement. It's more like each tick up down. Like imagine something ticks up in pennies and another stock ticks up in pounds. And another, you want the one that ticks up in pennies because
you have more control.
It's not losing you that much per multiple ticks. It's just, I don't know. I'm not explaining it well because
you are.
No, you are. Because we understand. Like we might not do it, but everyone, like all those three can trade. I used to trade Forex in 2015, 2016. I used to trade crypto in 2019. Traded a few stocks, but I am grasping the majority of.
Look at something like the pound versus the dollar, right?
Yeah.
That was the first.
That was
the
Forex,
first. The first market I put money onto and started looking at was that pair.
Same.
Right? If I try to trade it today, I'll make
money.
money.
That's an uptrend because the dollar.
I'll make money. Right? It's even reasonably volatile enough, but not really. Right? So let's say I want to make £500 a day. Right?
You have to use a lot of cash.
Really, that's 50 points. £10 a point that I need to find in the pound. It's very hard to find 50 points in the pound every single day.
Facts.
Right? So then what you have to do is you have to start forcing
increasing the margin.
You have to start forcing the issue a little bit.
Finding trades that aren't there.
Kind of, which I can do, but if I don't need to do that because that's how you make £500 on the pound, right? Versus the dollar. Now let's look at the DAX. Let's say
I have never looked at the DAX.
So the DAX at £10 a point, I'd need to find 50 points. 50 price movements. I think it's easier to find 50 price movements in the DAX than it is to find 50 price movements in the pound. The pound can spend 2 hours on a tight range. DAX don't do that. The pound can be like 1.3050 an hour, like up, not really, unless there's data out or something, and have multiple of these kind of static, low volatility periods throughout the day. The DAX, that would happen after 10 a.m. because there's a market open.
What would you say is the fundamentals behind why that is with the German markets?
I think it's an index thing more than it is Germany.
Okay.
The reason I choose the German index is because in the morning session it's either Germany, UK, France. Germany and the UK are the biggest kind of indices in Europe.
That makes sense.
So it should actually be UK. But the reason I don't go for the UK...
The FTSE 100 is
because the UK behaves a little bit like... You know what? The UK behaves a little bit like the pound. versus the dollar.
Yeah.
Like it has lots of slow periods. It'll move in the same direction as the DAX, but not with the right number of ticks per movement. So it's a bit harder.
It's less innovation. Like the world's less interested in it.
Yeah,
gonna
I
pause it
don't
there.
even think it's that. I just feel like there's a bit of that because that affects liquidity.
Yeah.
How many people are trading FTSE? I reckon day traders are probably trading DAX more than trading FTSE because of the same reason.
Yeah.
I ever got an opportunity to scalp the DAX with no training, just me.
Yeah.
Right?
Yeah.
And I made a grand.
So was this your personal money or was it company's money?
Company's money.
Right.
Right? But to do that,
Mm-hmm.
that was like,
Yeah, eye-opening.
that's like a young person going to Man United, making his debut and scoring a hat trick
Yeah.
away to Man City.
Yeah.
Like, whether or not he does it again or his
Yeah,
career,
or not, it
like
might-
that in itself
that
was
moment.
already like a wow moment, right? But he didn't want me. He knew that if I focused on that, that then I'll stop trading Euribor and other,
Yeah.
and that affects the business because they need to hit volume targets. And
Yeah.
so he's like, okay, cool, we'll revisit this at some point in the future, right? I was annoyed because I knew that I could be making a grand a day.
Exactly.
And I started doing the maths.
Yeah. You're like, wait, should I be working here?
So,
Yeah.
even in
If I could ask you, as a trader, because you're an employed trader, right? How does it work with commissions and stuff? Because you get a bonus on top of your salary, right?
yeah. So here's the difference. So as when I was at Goldman,
Yeah.
you get paid the base salary and then you get paid a bonus.
Uh-huh.
But your day job isn't here's a pool of cash,
Yeah.
make money,
Yeah.
right? That's called proprietary trading.
Yeah.
There's something else called agency trading. Agency trading is you are William Hill.
Okay.
You are making the prices,
Yeah.
both on the buy. You are Hargreaves Lansdown. You are trading 212. You are Binance,
Yeah.
right? Binance is a market maker.
Yeah. Exactly.
Goldman Sachs is like the Binance for stocks
Yeah.
to the hedge funds. So the
Yeah.
hedge funds come to Goldman Sachs and say, I want to buy this of Forex, I want to sell this of Forex, and you make a price.
Yeah.
And you're managing the risk around that. And you're still trying to make money, but you're providing a service. You're taking
So you become the broker, basically.
you become hedge funds are brokers to, so investment banks are brokers to hedge funds and asset managers.
Investment banks are brokers to asset management.
Pension funds, hedge funds, governments. Yeah.
Is that recording?
Mm-hmm.
Oh,
Yeah.
I'm getting scared. You need to get this
No,
in.
this is 70% of your job.
Yeah.
But Goldman, I was entrusted with like nearly 10 billion,
Yeah.
right?
Yeah.
And that sounds like the way he's reacting. But
I've seen.
When you realise how much they
it's
got.
it's a bit like
Yeah.
that's the value of that. That's how much the business is,
Yeah.
right? That's how much. So all the stocks,
Multi-trillion business.
all the stocks in my book,
Yeah.
right, added up to that amount,
Yeah.
right? The value of them.
Mhm.
It's not, and then you have to manage it.
Wait, did you? So you officially had $10 billion assets under management
Myself.
under your name,
Under
not
my
your
name.
team, you.
No,
Yeah.
me.
Yeah.
Yeah.
What? That's a lot for one man to deal with.
Yeah, that's why it's a different stress.
Yeah.
That-
It's a
we
different
always
stress. I
hear
mean,
about it being a
I'll
different
tell you,
stress.
It's not even a Goldman thing. It was a little bit always a Goldman thing, and I found out when I left because you go to another bank,
Yeah.
like the Mirror or whatever, and you've got a whole team managing $2 billion.
What?
This was actually a tough thing in my career because
Because
they didn't believe
you're clashing with minds.
that they'd give 20-year-old that much to manage when they got a
You
whole
was 20.
team. Yeah, when I left uni, I was 20.
Yeah.
When you got a whole
Sorry,
team,
which degree did you get?
I did maths.
Okay.
Maths, so yeah, I did maths at uni.
Nice.
So
That's a different language, that.
it was a different language to me as well.
But for the record, does any of your maths degree do you feel has helped you?
No.
Oh,
Actually, do you know what? Yeah. Do you know what? Yeah.
That's the quickest no ever.
No. It was a quick no. Maths teaches you how to think.
Yeah.
It opens your mind, a bit like playing chess does.
Yeah,
Yeah,
I'm a
right.
bit of a maths guy, but
Makes
not
you
like
logical.
I love maths.
Logical thinking,
Yeah.
right?
Yeah.
and deep thinking when it comes to problem solving.
Yeah.
So the elements of it. But I was a numbers guy from GCSE. Like I was good
Yeah,
at.
same, always.
I think numeracy is very different to mathematics, right? Being good with numbers is a portion of mathematics. It's a small part of it. But maths, when you get to uni, is very philosophy.
Yeah.
Prove the sky is red. Okay, let's assume it's blue. If it's blue, it can't be red. Do you know what I mean? It's it's logic and proofs and
Yeah.
memorizing these proofs and
Yeah.
learning stuff. Like all the trigonometry stopped for me.
Yeah.
For example, right? And the bits that were what I call engineering maths, where you have to calculate stuff,
Yeah.
was all squashed into like one little model.
Yeah.
And then the rest of
Just
it was
formulas.
proofs and theorems and
Yeah.
maths history, learning maths history, and then learning how they used to calculate things in the past and all this kind of stuff.
Well,
And I didn't enjoy it, if I'm being honest. I didn't enjoy maths at uni.
Yeah, it sounds a bit tacky still.
Yeah.
In another life, I would have done engineering.
Yeah.
Because
I
that was closer.
done electrical engineering.
That was closer to, you know, what I thought I didn't. You know when I say I'm a vibes person,
Yeah.
I didn't visit the uni before I joined, except for the interview. I had an
Okay.
interview for my course.
Mm-hmm.
And then I never really checked the accommodation. Listen, I was just go on the website, just pick the cheapest one and just turn up.
Yeah.
I was happy, like, look, is Warwick a good uni? Is their maths department good? Tick, cool, I'm happy.
Yeah, exactly. Yeah.
And I just applied,
3 years old.
got my interview, didn't visit Coventry, didn't know what kind of city it was.
Oh, Coventry.
Yeah, it's in Coventry. Warwick Uni is in
shout
Coventry.
Shout out to Cov, yeah.
Yeah,
Coventry's
I mean, I
alright,
enjoyed my time at uni.
Yeah.
But I feel like if there was one thing I would have done differently, is I would have properly researched the different courses
Yeah.
and understood what maths at uni was before actually just going on the vibe.
I've come because I want to ask a question that, like, it's such a cliche interview question.
No,
but
go
it's,
for it.
if you could speak to the younger version of you,
Yeah.
what would you tell yourself?
To learn to invest. I mean, I was 7 years into my career before I even realised that I could manage my own pension, that there was anything like a stocks and shares ISA. Because everyone just talks about IG index and day trading on the desk. Quick. Like that was the...
Wow. That's
Yeah.
mad. So people
the-
weren't talking about it.
Not stocks and shares ISA. That's the boring stuff. What I teach is the boring stuff. It's not the quick money. I can go Dubai and chop life.
Yeah.
It's the slow money stuff.
Yeah.
It's the
wealth stuff.
Wealth.
exactly the mindset, building slowly, trying to fill up your ISA. You know, not looking at your Hargreaves Lansdowne account every 5 minutes.
Yes.
It's literally the equivalent of buying a house.
Yeah.
You get a deposit. It's only after you've spent 5 years or 10 years, whatever, raising that deposit,
then
that
you're
you
like,
go to the
oh,
estate
right.
agent, and then you realise there's something called stamp duty. Then you realise, I need to pay solicitor fee. You know, most people don't learn all that stuff until they've actually raised an amount for their deposit.
Yeah.
Right? So I'm trying to say, listen, there's an equivalent of that in the stocks world. You know, find some cash, portion of your savings, and then I can do the equivalent of an estate agent, right? Point you to what you need to know, give you a strategy to use, give you access to myself if you have any questions.
You've just kind of cleared up something here. So one of the things that, this makes so much sense now, because maybe it's my naivety of thinking, anyone that works at one of these institutions, if you work for HSBC, you work for Lloyds, you work for Goldman, JP Morgan, whatever, you should automatically know about an investment ISA and stuff like that. But
I can
now
tell
I'm
you
realizing,
now, I know Forex traders who've worked in the city for 15 years whose stocks portfolios are down 80%. Wow. You didn't work in stocks.
yeah,
But
I
a
thought
lot
it
of
was like a
people feel like
company-wide thing.
because they got a finance degree, because they got the CFA qualification, because they spent 15, they should be able to figure it out, right?
And people presume that they can.
Yeah.
And
The
that's
reality
scary
of the
thing.
situation is, like I said, you're not just given a pool of cash and told to make as much money as you can as a trader and investment bank. And then if you're not a trader and you're the accountant or you're the tax guy or the salesperson or you're the stocks research person, you're even more further away
Yeah.
But you'd be surprised how many people in those positions think they know it. Right?
Scary.
Even me, myself, the 3 years in the hedge fund that I worked in, now what they do is they use AI and mathematical models to trade the markets.
Oh, yeah.
Right?
I'm familiar.
They build the models, you press on, you see millions being made a day.
Yeah.
Right? That was the first time in my entire career, so this is like 2015 to 2018, when I was like, wow, I know nothing.
That's crazy.
AI
When
took over.
You're building something that just prints money.
Yeah.
Right?
Yeah.
Do you know so I'd say 80% of what I learned there, 70% of what I learned there is part of what I use in the system.
Wow.
That I've simplified.
So how many years would you say that was into your journey in the city?
About 7. Yeah.
So now that brings me perfectly onto another question.
But all the previous 7 is the other 30%.
Okay, yeah.
Right?
But that's
this
foundation.
is understanding corporate actions, mergers, dividends, like all these things that can randomly happen in your stocks portfolio, and how do you manage your risk around it. But it was because of that 7 years that I got headhunted to work. Because they wanted to know how I can move that knowledge,
over to
understanding hedge funds. All this stuff was before. So when I moved to the hedge fund, I was like, okay, why JP Morgan or why are they charging you this for funding or this for commissions? It should be this.
Yeah, because now
Right?
you know the
This is
numbers
it.
that they should be.
'Cause it's two
the
different
cost price
sides.
versus the price that they're.
I know what they can at least negotiate down to.
Yeah.
Right?
Yeah. That's mad.
So you go and you add value straight away.
Okay, yeah, that's amazing.
Right? But now, there's a lot of things I learned there that I can't teach an average person this. But the important things, for example, I'll give you one proper example. You're running a stocks portfolio, right? I'll tell you now, anyone can pick a stock. You can watch, anyone can pick a stock.
Yeah.
You don't need to join Stock Pickers Academy to know Apple's a good company.
Yeah, of course, yeah.
Right?
Yeah.
Anyone can pick a good company.
Mm-hmm.
We've got so many YouTube videos teaching people how to pick a good company. That's 30% of the job. The other 70% is your mindset, not decision making, knowing how to find the right combinations of companies that makes a good stable portfolio.
Good basket.
What's a good basket of companies? At what prices? You don't just. There's just so much, but really, people talk about diversification of a portfolio. We hear it on YouTube and we think, I got to be diverse.
Yeah.
Diversification gives you average results. Okay, now that sounds crazy because everyone has soaked up all the YouTube videos that say diversification is good.
Yeah.
But how do you diversify and what are you diversifying?
Facts.
This is where
there's levels to it.
Yeah.
Exactly. And these are the bits that I learned over there.
Okay.
Right? Because you're looking at I'm going to change the numbers a bit. You're looking like, say, $1 billion portfolio, right?
Yeah.
One strategy out of multiple.
Yeah.
And this portfolio, you now have a risk screen. And it tells you your risk to China is 1 mil. Your market cap risk, right? I.e., how many big companies you have to small companies. Your risk is, say, 5 mil. Volatility risk. How your portfolio is going to move. How volatile is the market?
And
how volatile is your portfolio? Let's say the market is like this. And it tells you, but your portfolio is like this. You want your portfolio to, it needs to de-risk a little bit, right? So you've got all these different risk factors. Liquidity. How easy is it for you to sell every stock in your portfolio today?
Especially if you've got big numbers, that's a harder game.
Thank you.
Yeah.
Right?
I've never thought of it
so that's
like
liquidity risk, right? So they've stripped out every momentum, right? You can buy momentum. What does that mean? You can buy a momentum ETF. An ETF is like, if a stock is a fruit, an ETF is like a smoothie, right?
That's a big bar for that.
So certain stocks in the world are like your barometers, a bit like how Bitcoin is your barometer for the crypto market,
Yeah.
right? So imagine I had a portfolio of Bitcoin, Ethereum,
Yeah.
maybe Litecoin, just the
Key players,
five
yeah.
key players, right?
Yeah.
And then I call that the crypto momentum ETF because they're the first movers before the alt season have. They're the first movers. In stocks world, you have your Apples, your Amazon, your Teslas. You've got your big movers that just looking at
Like the
these
FANG
10
stuff.
stocks, looking at these 10 stocks will give you a good indication of where we are in the stock market cycle, right?
Okay, yeah.
They move first,
Yeah.
and then the rest follow when they see the leaders. They're the leaders. So you can quantify that into something called momentum.
Okay.
So then you can look at your portfolio and say, this is momentum. So when momentum is moving up, when you make profit and loss, it does it on the same thing. It will let you know what portion of your profit is from momentum. So listen, this ain't because you're a good stock picker. This is your exposure to momentum and how much that exposure to momentum has made you.
Okay.
This is your exposure to dividends. This is your exposure to growth stocks. So today, your profit was 200k in growth, 300k in momentum, 150k in beta. Beta is like, let's say the whole FTSE 100 index is moving. And you got Tesco. Tesco has a beta close to 0. What that means is that it's not influenced by the index.
Okay.
Some stocks are. If the index moves, it's going up. If the index moves up, it's bringing it down.
Okay.
So how sensitive a stock is to the index, right? Some stocks do the opposite. Index goes up. Index, look at it like your country. So the UK is doing well, your stock is going to do. The reason Tesco, people are going to go to Tesco regardless. So if the country is, during the pandemic, Tesco didn't crash. Because people are still going. People are even going there more. They had queues and stuff. This is it.
Okay. Interesting.
So some stocks are sensitive to the way the country's moving. Some stocks are not. Some stocks do the opposite. Right? Knowing that aspect of, if you're watching this and you invest in stocks and you didn't know about beta, you're doing it wrong.
Game.
That's what don't tell me which YouTube video told you about beta.
None.
Okay. I know about beta because I've sat on the other side. Right? So all this, everything's rigged. The big boys did. Nonsense. Once you understand risk properly, you realize nothing is rigged. No one is stealing your money behind the scenes. The only thing they do take is commissions. Free trade will tell you it's free. But then you look at your price you're buying at and the price you're selling at, the spread, making it all back. Nothing is free. When the UK, come on.
0% commission. 0% commission.
Free. People just take things in different ways and then market to you. Right?
Or
It's
sell
a
your
game.
order flow like
This is
Robinhood
it.
are doing.
This is it.
Yeah.
So
It's like crypto.com and there's 0 fees. It's crap.
bro.
Like it's just the crypto's more expensive.
And even when you're withdrawing and moving out your cryptos and stuff.
nothing is free. Everyone's just finding a different way to make money off you, which they should because they're a business. But package it in a way to make it appealing. That's just marketing. Right? And whoever markets the best wins. Simple. That's why a lot of people join free trade and trading 212. Good marketing. Right?
Yo, this is
And they're also like, let's be honest, they're pretty good products for retail.
For a beginner.
I like trading 212's UI.
Yeah.
But again, here's the thing. How many stocks on trading 212 got blocked? They said you can't buy anymore.
Bear.
But I didn't have any of them. Why? Not
Why-
because I didn't see the opportunity. Sorry, I cut you a little bit. But not because I didn't see the opportunity. But I understand that, number one, trading 212 is just a GUI for interactive brokers. Now, you can have an account directly with interactive brokers. Right? But these men realize the cost is high. So do you know what? I want to present data and make trading more accessible to everyone. But I don't have to go through, I don't want to go through all the licenses and stuff. So let me holler at interactive brokers who are credible. And then they become our broker. Every order that comes through, centralize it, sent to interactive brokers. That's why you're on pending. Trading 212, when you put an order through, interactive brokers sends it out.
Okay.
Right? For ETFs, Hargreaves Lansdown uses Vanguard.
Okay.
So everyone is linked, but all of them then use an investment bank. Right? And that, like, once you understand the game,
Everyone's in
You're
bed
in.
with everyone.
basically, once you understand the game you're in, then you realize that, let's see how these guys are marketing their free. Let's see how these guys are.
Yeah.
But what's important, when I see a stock that's alerting on my watch list, I got a watch list of 1,000 stocks. I want to know that the platform that I'm using, when I hit the buy button, it's going to go through. That's liquidity, right?
Yeah.
And when you've worked on the other side, you know that liquidity is important.
Yeah.
That
100%.
affects how quickly you can get out and
Yeah.
how quickly you can get in.
Yeah.
Can I ask you a question
Yeah.
in regards to this? So this is a question I'm dying to ask someone, because from my understanding and my experience, like, trading is such a mental game with
Absolutely.
yourself.
Yeah.
Does that change when you're managing? Which one's the harder game mentally? Trading billions or managing billions, millions, whatever, for someone else, or managing your own money? Which one causes the bigger emotional kind
It
of
depends
turmoil?
It depends on, at the end of the day, how much hits your personal account, right? If I'm managing money for Goldman, right, they're paying me a salary and I'm probably getting a bonus. Ultimately, I'm still getting paid. If my ability or inability to do that job well affects my job security, then of course there's that link.
Yeah. Okay. Yeah.
Right?
Yeah.
That's actually why I got into that.
Okay.
I think in this racist world we live in, I feel like I chose my career based on what I felt I'll be good at, but also what I felt has this been correct or not? We'll leave that to another time. But a career that I felt, no matter the colour of your skin, whatever disability, whatever it might be, if you hit the numbers, you hit the numbers. Nobody cares.
Yeah.
Right?
Facts.
Yeah.
That's what really put me into the industry.
Okay. Yeah.
Once you start working in industries where it's not P&L and it's objective, whether that's consulting or law or accounting, where there's nothing you can just, that's me. That number there, that's me. And you can't chat to me.
Put numbers on the board.
Right?
Yeah.
I feel like you become a little bit more.
It's different.
Yeah, it's different. And for me, I wanted a meritocratic career, and I wanted one where that was the case, where as long as I perform, doesn't matter my colour,
you can progress.
I can progress.
Yeah, that's.
Did
I've
that
never
turn
even
out to
thought
be
of
the
it that way.
case?
Wait, I got a mad question.
We'll leave that one.
So would you say, as a black man in finance, you don't feel like your ethnicity held you back in
You
finance?
see, that's why I said we'll leave that one.
Oh, we'll leave that. Oh, we'll
You
leave
know what?
that.
Yeah, look, I feel it did.
Yeah.
When you walk into a room, when I was at Goldman, right?
Yeah.
I think there was a bit of ageism.
Yeah.
I was gonna say, is that a thing as
Yeah,
well?
yeah,
Ages
yeah,
of-
I was young. I was 20 when I
Yeah.
started.
Yeah, they're like, nah, who's this?
I was
How
the
did you even
youngest
finish your degree at 20?
because I went through. I think when I was in primary school,
Yeah.
I was getting in so much trouble.
Okay.
Yeah.
I got kicked out of my first primary school.
Yeah.
Put my middle finger up at the head teacher.
Yeah.
Oh, wow.
Is that a sackable offence? I don't know. Now I look back at it, but yeah, led to me moving to another primary school.
Yeah.
And I was on that whole report book thing, and I was getting in a lot of trouble.
Yeah.
I grew up in Peckham, and the
Yeah.
environment was just different, man. All the families, everyone's struggling, and the kids come to school, and it was just toxic. And maybe I added to the toxicity
A little bit.
a little bit.
Yeah.
Maybe I was bored. Maybe I was just a young kid that was boisterous and very active. But I was getting in a lot of trouble. So when I was in year 3, I spent the rest of year 3 in year 5 because there was a teacher there that no nonsense.
Right.
Wow.
And then when that year 5 group went to year 6, I stayed there. And then a year after that, stayed there. And I was top of the class again.
Yeah.
And then I just went to secondary school early. So then that's where I got the year.
So you went uni at 17.
Yeah,
Wild.
yeah.
Sick.
Wild.
That's mad how like that problem turned into.
Yeah, I mean, I was always smart,
Yeah, accelerate.
right? I was always academically.
Mhm.
I mean, I learnt my times tables when I was 6 years old with the cane.
Wow.
Yes. Yeah.
And then from there, I
Yeah.
kind of feel like I had the
Sorry,
self-motivation.
I felt that one.
Yeah, that's how I
yeah.
learnt my times tables when I was 6.
The cane, you
I
know?
think the
Yeah.
other thing I learned with the cane was how to tell the time.
Yeah.
But I'm still late.
That's mad.
So, but as a kid, as a child, right, you have to remember, you went to secondary school. There are people in year 11 who didn't know the times tables.
Yeah, it's true.
So you have to think the amount of confidence you get as a child when you learn that, regardless of the method, right?
It's different.
It's different.
So then it's probably the schools not stimulating you, which is
This
why
is it.
your behavior changes. Yeah, having
Yeah.
worked in schools, I'd say that is a major factor.
And do you know what? Yeah, I think 50% of it was me. I think I was just, I think I was just on
crud.
Now I look back at it, do you know what I mean? I compare myself with my brothers a bit. I'd be like, yeah, do you know what? Yeah, some of this was just me.
Yeah. Okay.
You have to have honest conversations sometimes.
Yeah, I love that.
Yeah, man.
But yeah, that just gives you the confidence. And yeah, so when I started at 20, no one knew until my birthday.
Wow.
So it's it's your 21st birthday.
Yeah, and you can't not celebrate your 21st.
And it,
So
you
everyone's
know,
like,
every desk has a
wait.
secretary.
Okay.
So she logs everyone's birthdays.
Wow.
And so that's when everyone knew I was 21.
Yeah.
And I think it affects things now.
Yeah.
You have to remember, humans, people are going through all sorts of financial stuff,
Of course.
even there.
Yeah, exactly.
So then obviously it's like, can we give this child X
Yeah.
amount
Yeah.
as a bonus?
Yeah.
Oh,
yeah, with the
yeah.
bonuses.
And then back then, times were more racist back then as well.
Yeah.
So you was a 21-year-old black man in a white
Yeah.
environment.
Now, I wouldn't say the racism was strong at Goldman in the sense of I didn't feel that. In fact,
Okay.
I think it was even maybe the opposite.
All right.
They gave me the opportunity and said,
Yeah,
we don't
yeah,
care
that's what I
what
was
no one
thinking.
thinks.
Yeah. I'd say it's that.
Goldman is the only environment I'd say it's the most meritocratic in terms
They just
of
care about the numbers.
they give you responsibility. They don't look at your age, don't look at
Yeah.
right.
Sick.
Respect.
But I think there was ageism
Right.
when it came to like compensation, and I think
Okay.
there were one or two people there
They were trying to
that I
back it up.
actively really felt there was some racist decision making and stuff going on.
Yeah.
Right.
Yeah.
Initially, they were quite far away from influence on my career,
Yeah.
but then later on,
As you start progressing.
yeah,
like, wait,
managers
hold on.
change,
Yeah.
and yeah, there was, I heard, I had a very strong network there,
Of course.
high up.
So there's nothing that you
So,
don't hear.
Stuff that you think I wouldn't hear,
Yeah.
I would hear,
Yeah.
and you won't even know that I heard because you don't even know that I got a relationship with.
So,
And even the way you're interacting.
in the traditional working world, when
Yeah.
there's a new manager or a new team leader or whatever, it just fucks up. Sorry, my language.
can,
but
yeah.
It just
Some-
messes up the base,
It can,
and everyone's work is just off now because
Yeah.
of this new person bringing in this new energy. Is it the same in the financial world? If there's
it
like a
depends.
new person
It's
comes
case
in,
by case,
okay.
Even the hours you work. Like I was working my first year at Goldman, I didn't take a single day off, and legally you have to. The regulators, the financial FCA, contacted Goldman and said it's mandatory for every trader to take 2 weeks off in a year. That's mandatory. I didn't realize when the year came up because I was enjoying myself too much, but I was also working. I was enjoying myself, but working.
Yeah, you hit
dog.
that sweet spot of like
Yeah.
working.
But there are some
which is
people
fun.
at Goldman who are doing 8 to 5.
Yeah.
Every desk is different and every role is different. But I realized, whoa, I'm managing 10 billion here,
Yeah.
You're loving it.
right? And I realized how massive there was an opportunity in what I was managing
Word.
to transform that whole trading book, which I did.
Wow.
But I realized, look, there's no one here to help me, in terms of like my responsibility was the book. Now I could have coasted, right? But I realized there were some opportunities that people had missed prior. So I put in the hours, coming on weekends, looked at, this is where I went through every single index, knew what every single stock was.
Wow.
you know what I mean? The finance funding level and
You just went with the extra level.
Yeah.
one example, right? When I joined Goldman, managing that book,
Yeah.
we were only talking to 3 other banks, asset managers. We were only talking to 3, and that was sufficient.
Yeah.
When I left, it was 30.
Wow. Wow.
They needed you.
Wow.
So damn. So that was a
10x.
mindset shift. I
10x.
had to challenge why. You know when you're comfortable, they got too comfortable in the book.
Oh yeah.
And I said, but do you know the value it is if we were chatting to 30 people?
Yeah.
That means you know the market.
Yeah.
And once you know the
the
market,
moves.
people were coming to you.
Yeah.
So I got to a point where Barclays, RBC, all these different banks,
And they're all around the corner from you in the city.
eventually everyone knew who I was.
Yeah, exactly.
So imagine you've got bare stocks to sell, or you wanted to do a transaction.
Or you're looking for liquidity or
And
whatever.
you're thinking, who can do this trade? My name always came up.
Yeah.
Some yes, some no,
Sick.
but I became the go-to guy.
Okay. That's
Once you
mad.
become the go-to guy, so that's what UBS is doing. Oh, that's what. Okay, you know what? I can't do it, but because I know you're looking for this and he's looking for
You're
that,
the plug.
I'll do it, and then I'll go do it with him.
Yeah.
So I now became like the engine.
Mm.
I created this whole thing that now they've even AI'd it.
Yeah.
Not AI, but they.
Yeah.
It's all. A lot of this stuff is
Which-
kind of. They've created a platform where people. Yeah, they've.
Brings me on to our final question before we wrap up, which is, how do you feel AI and technology is going to affect the future of trading and in the markets?
It's going to take over. Whether that's even treasury, even trading, even eventually all this stuff. You'll see. You eventually have to pay developers to. Well, it's going to take over everything. But that doesn't necessarily mean people are going to lose their jobs. I think there's a lot of...
Yeah.
Goldman hires more people in tech than Google.
Wow. Crazy.
But people don't know this.
Buzz.
It makes sense though.
Yeah, because...
You're dealing with kind of more important stuff.
Yeah, because you need developers for everything.
Yeah.
Even in the accounting... Like, every part of the bank needs developers. And then you've got the whole technology division itself.
It's true.
So
It never stops.
yeah, it's why tech is now the new investment banking, right? People are learning Python, SQL, Tableau. Tableau is like for presenting data, you know, the visuals, the effects. SQL's databases, and Python obviously you're coding and doing all kinds of stuff. Like those are like now. You can't be a trader now in the city without that skill set.
Wow.
But that was a skill set that I picked up when I moved to the
That's
quant.
so mad that it's moved.
It's now become
You
what used to be
You know
Excel.
what? I can relate to the. We just said tech is now the new. What was that? Tech is now
Now
the
the
new.
new investment banking.
Yeah,
I want to work in tech.
Yeah, because my dad has been in tech since 1989, and like he's one of the best developers on planet Earth, having coded so much, and his income was like 2.5x in the past probably 2.5 years, like skyrocketed.
Yeah, I do definitely think that it is moving that way, because it's almost a point of, if you don't have the best developers, the company's in trouble. It's now like a developer warfare.
Yeah, everything's
you can
becoming-
get the best developers. Who's got the
Yeah,
best
software
devs?
engineering now is like, and that affects even investing opportunities. Like, a lot of people don't know, for example, you can buy property via the stock market.
Yeah.
REITs.
Yeah.
Right? Now, you can look at REITs that are like data warehouses, right?
Crown Castle and all them.
Anything software engineering, tech, right? It's service. Where the server's housed, data warehouses, right? So you can invest in tech just by buying a REIT. That's data warehouses
Yeah.
where they're keeping all the servers,
Exactly.
right? Whether you're mining, servers are like everywhere.
Everything.
They're
And it's
they're
only gonna get
buildings
bigger.
that just have servers.
And it's only going to get bigger. Like the space that they're going to take up.
Yeah, I look at that REIT every single day. I haven't invested in it, but I look at DLR. I think
Oh,
it's
DLR.
called.
Yeah, Digital Realty Trust. Yeah.
What, are you just trying to find a good entry?
Yeah, just don't dip. but without you know this REIT, yeah. You know there was one chance to get in there.
You can't buy the dip.
There's no dip.
Man's looking every day.
I've been looking at it for 2 years.
No
Right?
dip.
And hear this, in those 2 years, it's only done like 30%. So it's not like it's skyrocketed.
But the dividends are crazy,
right?
though, aren't
The dividends are healthy.
Yeah.
But I look at it, there was a time to get the dip, but the dip was like a little dip.
No,
Like, it wasn't like a dip.
Yeah. yeah.
But these are the ones where the bigger you get, eventually you might just put X amount on and just leave it.
Yeah,
Knowing
man.
that if
Exactly.
that dip, but then I think this thing just goes up by 0.5% every week or whatever.
Yeah.
Right? But that's the thing, not every good investment deserves your money.
Yeah.
It's true.
Right?
Yeah.
If I committed a lot of capital into that instead of Litecoin,
Yeah.
Litecoin done me 100%.
Yeah.
Aye, that's my
And
baby.
then now I've got back into it.
Yeah.
Right?
Yeah.
Remember that I put it on the group. So like blockchain, I got it on WhatsApp. I put it in the group, like my thinking around Litecoin.
Mhm.
But if I put that all that money on DLR,
Yeah, it's not the same.
bro, it's about making money.
Yeah.
Sometimes you have 30 good investments like that.
Yeah.
You have to say, what's the best?
Place for this.
Not what's the best investment, but
Yeah.
which one might actually. All these are good investments, right?
I always see REITs as just wealth preservation.
Yeah.
Mm.
When I'm balling, then we'll go there,
Yeah.
right? But right now, this is what I was talking about in terms of size.
Yeah.
A lot of investors don't know how to choose their size,
Mm.
right?
Mm.
So if you've got 5K, you can't manage it like someone who's got $1 million.
Yeah.
Oh,
it's
yeah.
not the
Yeah.
Because
same.
that person can just put REITs on the ETF,
Mm.
2 index fund,
Mhm.
and earn 100K
Yeah.
because they made 10%,
Yeah.
right?
Yeah.
You try and mirror that because
It's
you've been
not the
reading
same.
Warren Buffett and all this nonsense
same.
that's not for you,
Yeah. Oh,
bro.
facts.
Right?
Facts.
You need a strategy to match your income.
Yeah.
You need a strategy to match your wealth level
And where you're
Right.
trying to get to. Yeah.
right?
Yeah.
And the books that are out there are not designed for people with 5K
Yeah.
Yeah.
in their HSBC account.
Yeah.
Facts.
But I'm here saying,
Mm.
if you've got 1K, you can do things.
Yeah, you can.
Yeah.
Right? Just pick the right SK alert, right?
Mm.
2 stocks,
Yeah.
Well-
It's facts.
and this is it. You should be prepared to be a bit more risk savvy with 1K.
Yeah.
You can't use that same risk profile once you get bigger.
Yeah,
Of
'cause
course.
you literally won't even want to.
Yeah.
With
Yeah, 'cause you don't wanna
100K,
lose
you
it.
probably ever need to use half. The rest will never probably get touched.
Yeah.
Facts.
And that half is enough to generate you 10K, 20K. If you make 15K with 50K, that's 15K on 100K because you left the other bit as cash.
Yeah.
Yeah.
That's a 15% return on your overall 100K,
Yeah,
even though you never
yeah.
touched your 15K.
Yeah.
But 15% on 100K,
Yeah.
hedge funds aren't doing that.
It's true.
You should be happy.
Yeah.
Thrilled.
I think this is
Facts.
one of the things that why we got so passionate about starting Blockchain Sensei, and I'm sure you can relate to it, is a lot of the books and a lot of everything is you should be happy with 9% or 10% a year. We're like, no,
Don't do that in a
More
week.
change.
Do that in a week.
Why
The
should we
reason
have
those
that?
books say this is because 9% on a bill, 9% on 100 mil,
Yeah, it's
Yeah.
crazy.
9% on 10 mil,
Yeah.
nominally, it's good,
Yeah.
right? This is why people come to, what books do you recommend? I'll be honest. If you're watching this and you ask me, this is what I actually do. Just use their space system. I've read the books. I know even the books I haven't read.
You
I've
know what
asked
they're gonna say.
someone credible
Yeah.
about the book, and they've told me what they've got out of it.
Yeah.
Right? But really and truly, I know that you're going to read that book and watch all that. Listen, you got 5K in your account. You're not going to. That's not going to the difference.
Yeah.
The difference is picking the right portfolio combination of stocks
Yeah.
and just trying to, that matches your lifestyle, your income, your level
Yeah,
of wealth,
everything.
your class,
Yeah.
everything.
Yeah.
And as you move through the gates, we step things up.
That's it.
I will tap you on the shoulder and say, no, we're not doing penny stocks no more, man.
Yeah.
We're not doing small caps. We're not doing. I say, remember I told you never invest in Apple? I've changed my mind. You're a millionaire now. You invest in Apple.
now.
Yeah.
Yeah. Hear that?
But trying to build like this Amazon, invest in what you know, invest in what you use. Or yeah, I've got an iPod, I've got I watch Amazon Prime, and because you hear all this nonsense on YouTube, you spend your 1K, divide it into 5, and you put £200 on Apple, £200 on Amazon, £200 on what else do people use? Nike, because you wear trainers.
Yeah.
Then you come to your portfolio in 5 years' time and you've made 20% in 5 years.
Yes.
Go on holiday, man.
Yeah.
Enjoy your money. What's all this?
Yeah, exactly.
Right? Nominally,
Yeah.
making £200 on a grand in 5 years is not worth your time.
At all.
Right?
It's not even
Enjoy
worth
the
books.
money.
Yeah.
Enjoy your life.
Yeah.
Get your career up.
Yeah.
Get your savings up, and then go. But if you say to me, okay, 1K, I'm going to invest in some a bit higher risk of stocks, at PayPal, Square, other companies that I use, but have a better risk reward profile.
Yeah.
Square 100, good value.
Yeah.
PayPal 100, good value. This thing has dropped now. We've seen the dip in a
yeah.
product I use, but we now see it can get back up there at some point in the future.
Exactly.
Okay, cool.
Sick. Bro, that's mad game, bro.
Thank you, man.
Thank you,
Come on, man.
thank you,
Nah,
bro.
thanks
That
for
was
having me on.
levels,
Bars.
absolute
Bars.
levels,
Levels.
bro.
Fucking
Watch out for the next one.